Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex forecast for the week starting of 21st to the 26th July 2019. Previous week turned to be a very good technical week, and the way the charts are forming, it looks like the coming weeks should be technical and provide us some good trading opportunities as well. So we will be now reviewing the previous week forecast, which you can find in my blog. On Monday I will be publishing this very text format for the forecast, which would be a summary that you can always go and refer to, summary of the forecast. It's not a replacement to the video, it's a summary that you can come and refer to. So just come back to the blog vladimirribakov.com and you would find the weekly forecast. Text format. It will be published as mentioned on Monday. So we will review it right now, see what worked, what failed, and what are the opportunities we are going to work with for the coming week and weeks. Some of the trades are still running and still paying big time as we are riding them for several weeks. So before we go and dig deeper, if you are new to the channel, I would like to invite you first of all to subscribe to the channel. To do so, just go below the video and click the subscribe button. Just make sure to allow and enable the ring button to be there so you can be notified when I upload a new content for you. I would like to ask you to leave your comment and your feedback in the comment section below if you enjoy the work, or if you have any thing to ask, any question or any request about any of the instruments. As a rule of thumb, I include the most interesting instruments as I find them. But if you have any question about anything specific and I might be able to help, I will try my best. Not guaranteed I will have a view about any of the instruments that are not included. The second thing, invite you to share the video if you think any one of your circle would enjoy this video in his trading. You're welcome to share it. It's free for the community. And the last two things, I invite you to join my free Telegram channel for trading ideas, for trading education, for articles, videos, and many more great things. To do so, and again, it's completely free, just follow the link in the description or in the comments and join us. Free group for you. And the last thing, join me in my live trading rooms on daily basis, covering all the most interesting instruments inside Traders Academy Club. Again, the link is in that description. So let's begin. The first pair we are looking to trade is the euro versus the pound. And the critical area that we are looking to hold is the 090, 091. A week before we had a trend line breakout, which as per expectation we expected it to go lower to provide us the two waves. And if it would not manage to hold again any visit or any new high around 090, 091 should provide a further sell opportunity. So let's take a look. What do we face on with this pair? First of all, the trend line itself did not manage to hold, and the breakout below the trend line failed and provided a new rally, a new spike. Now, did that change the higher time frame overview? The answer is not. And the weekly chart right now provides several spikes on the top of the psychological level of 90, very massive resistance area. It is also the top of this possible consolidation area, right next to the higher part of it, above the middle. And the daily time frame shows us the very massive divergence. A new cross on the moving average happened 2 days ago. Triple dropping candles, as you can see, 3 in a row, creating lower highs, lower lows, and this should be a good call for a beginning of the move down. Here is what we are facing right now. Of course, cross below this low would be a very good sign that we are finally ready to do some movement. The 1 hour chart already provides us a structure of some impulsive wave, right? Divergence is developing, so we would be very likely facing some kind of retraces here, which later on I'll be looking as a sell opportunity. The way the daily looks like, it looks good to start looking for sell the rallies. So my view for the euro pound was and remains looking after sell setups surrounding the area of 0.90, 0.91. The next one we had was the pound versus the Aussie, and the expectations for several weeks in a row now are for a great ride down, and we expected it to go and push all the way down to the 100. So here we are, I can say mission accomplished. The 100 level of Fibonacci expansion in this double cycle is reached. What do we have from here? First of all, we are facing a divergence which is showing a slowdown in both big legs and the small legs which come from the 4 hour chart. This means that very likely we should face some kind of a fight, some kind of a bounce. Does that mean that the move down is over? Most likely not. But will we be exposed to any potential fight right now? The answer is very likely yes. And you can see we had the same structure around the 61.8, which caused several days fight. Now we are building up a slowdown on the 100 level expansion as well. So the way I see that, anything surrounding the 177.50 down to 175 psychological zone should provide us some retraces time. So from my point of view, as for now, this is a great, for all those of you who are riding the sells with us, and which we started here, just a reminder, several weeks ago, this is a great run of several hundreds of points. Very good place to make sure the money is in the pocket. And for all those who are after short-term trading, looking for let's say drops, downs and buy opportunities, from my point of view, might be the right thing to do right now. If we get anything like that, or two false breakouts, again the area of 177.50 down to 175, from my point of view, should be a fighting zone, and would provide opportunities for buys. If we see new lows from this area, most likely they be the ones that will provide some bullish bounces according to the levels of the cycles as they bounce. Dollar Canadian, the critical zone we had was the 130, which hold and yet provide opportunity to see that dropping down to 129. That was the plan of the week. We got rallies, we got drops, but we are stuck in this range. Looking on a daily chart right now doesn't really teach us nothing. I still think we might get it going down to 129, but the way that the daily starts to look like, it starts to show it as more aggressive, not obvious, not clear. I like less the fact it's stuck in a range right now. So I personally think the dollar CAD, which I still think should go down to 129, but it starts to be less expected, more zigzagging. Again, you can see several fake attempts, right? One was right here, the second one right here, to the upside. To the downside, fake move here and fake attempt to make this low. It starts to look more suspicious than promising. From my point of view, this is the best time to simply go to neutral. Euro Aussie is another big hit that we enjoyed from. According to the weekly cycle, we expect two waves down, which are forming on that daily chart. As you can see here, our plan was a couple of weeks ago, sell the rallies, and it's hitting and going. So let's take a look on this pair and what do we face there right now. We expected it to continue down as a second leg. We have it. What's next with this pair? It's coming to some critical areas and which we have right here next to the area of the 100%. The slowdown of the divergence that comes from the daily chart, the slowdown from the second cycle developing on the 4-hour chart as well, make this area as an area of a possible reversals. So from my point of view, the closer we get to the 100 level, the stronger the expectations would be to see bullish reaction. Would that change a long-term cycle? I'm very doubtful. I would use them very likely as sell opportunities. So I believe that we should be facing something like that. Sell the rallies was and remains still the plan. For all those of you who are riding for a long term from this rally, which provided us a bearish hidden divergence, again, the long-term plan does not change. It has a good zone for cash out and profit taking due to the great risk-reward run we have here and the very good levels. It does not change the long-term plan. It most likely should provide some short-term opportunities for bounces and then likely for continuation lower. My long-term view for the euro versus the pound remains bearish. On the shorter view, likely we would see some sort of a fight from the mentioned level of the duplication. Next one is the Aussie versus the dollar, which we had a bullish view on. Long story short, triple cycle from the weekly should provide two waves on the daily, and this is what we were looking to trade. So we got it, and right now we are facing some slowdown. So from my point of view, this is a great place to put a V on and enjoy the profits and look for the next opportunities. Honestly, right now I don't have a clear view about this pair, even though I think it might still push slightly higher. But the fact is that the weekly potentially developing some hidden divergence and the daily is slowing down right now with this divergence. From my point of view, it's a great place for a cash out. We should see how the pair would behave around this top of the channel. As for now, it's not clear. We are facing a psychological level of 0.70. We are facing a very strong 200 moving average, which used us as a resistance several times already in this move down. We did get the two waves up as expected, and we are facing divergence against. So you know my view, when the market gives us the signs, we should not try to be heroes. We should be smart. Make the money, look for the next opportunities. That's my personal view. This is how I trade, and this is my belief in trading. We never can beat the market. All we have to do is listen when it gives us good signs, and mainly when it gives us the bad signs, to get out from the trades when it's time to get out. So the Aussie dollar, which was great run for us, made it two waves, game over. As for now, stepping back, it becomes neutral. Australian versus the franc, the idea was the same, two waves correction to the upside. Let me just remind you, what did we have here? Bullish divergence coming from the weekly, which should have taken us to the upside and two waves. Even though that the second wave, I was expecting it to be a bit stronger, the second wave happened here and blocked again by a very powerful resistance area, making a false breakout of this high, making a slow down divergence right now that comes in 2 time frames, daily and 4-hour chart by itself. This is from the daily, this is from the 4-hour. It's a slowdown, and it's time to step back and look for the next opportunities. I still believe we might see anything like that, but as for now, after making the 2 waves, and yes, the second wave was shorter than we could wish from the beginning, but again, facts are what are the most important thing, and the facts are currently that it has signs against us and we lost the synchronization. What synchronization am I talking about? 3 time frames trading. Weekly showed upside, daily showed upside, 4-hour showed upside. Buy retraces was the plan. Right now daily shows downside with the divergence, 4 hours supporting it. The synchronization lost. When synchronization is lost, the market is not ready to provide us what we expected. And therefore, as for now, the game is over for this pair. Moving to the next one, Aussie versus the Kiwi. Was looking for buy opportunities from the level we had, or a new low once we get a bullish divergence. So the previous level never hold, and we never got any higher highs or trendline breakouts. Alternatively, we did have a new low, and right now we are potentially, and I say potentially because we have no clue where it will end, right? But potentially we are having here a developing divergence. So the thing to do is to mark the last trend line, and if we manage to break above that, looking for retraces and buys. That would be the thing to do. Or on the lower time frame, start to scroll up, start to build up, step up as 3 higher highs, 3 higher lows, which will identify a reversal to the upside, and then look to buy retraces. As long as it didn't happen, of course, we should not really be dealing with that. Pay attention, it might become as a good, interesting opportunity. Again, as a potential to follow. Next one on our list was the CAD versus the franc, where we expected 2 waves retrace or a ranging retrace, and then looking for buy opportunities. So CAD franc making the expanded 2 waves to the downside, 1, 2, and look what is building up on this pair. It's very likely to build some sort of a bullish hidden divergence. For that to happen, we will need the MACD to make a new low, which would be lower than the first low right here. And then the 4-hour chart would have to fit in and provide a divergence by itself. This could be the case. Or it could simply go and rebuild the divergence here. Right? And then we would mark the most recent trend line, and break above that would provide us the buy opportunities. So pay attention to that. It looks very interesting to follow. And if we take a look here on the level, on the days to pay attention to as a possible buy opportunities, 23, 24, as you can see here from the statistical information we have in the Forex crystal ball, this could be the zone and the days to start looking for the buy setups. So that's for the CAD versus the franc. Our next one was the Aussie versus the yen, where we expected the 2 waves to the upside. So here we are, exactly like with the Aussie franc and Aussie dollar. The second leg was not as deep as we would wish. We got a blockage, we got signs against. This becomes right now as neutral sign. Step back, let the market make it clear. Next one, Euro franc. The expectation was to see the push towards 110 or slightly lower, and to look for bullish evidences right there. So what do we have on the euro versus the franc? We got the push towards the 110. Do we have any bullish evidence at that moment? No, it is a potential divergence. And I say potential because the MACD never ticks up yet. It's still going down. And because it's still going down, we have no clue will that drop completely for new low, or will that act as divergence? This is just a potential. So what do we face in terms of cycles? The weekly cycle is making these two waves for us. We have a psychological level of the 110, bullish potential divergence forming out, and then daily chart also bullish potential divergence. We had one false breakout, and we might go and face another one, which could be on the trend line that connects the low, or one more horizontal false breakout. In that case, we would want this level again to be false broken, and then we can go and mark the trend line, and once we go above the false break area, start looking for buy retraces. So the area is reached, 110, maybe slightly lower. Now we should be looking for evidences. If we take a look on the statistical view, once again we have a critical area right here on the 110, slightly lower, and the days we must pay attention to are right here. So it might take one more week, as you can see, to slow down, right, and then start the reversal. But the signs should start and build up on the coming days if we are about to see the reversal. The next one is the euro versus the dollar. I expected two waves rally, and as a bullish hidden divergence from the daily, so the expectation was to see it rallies. We got the drops, we got the rally, we got another drop and another rally, and the bottom line is the euro dollar never made a big rally that it had the signs for from the weekly cycle, and right now it is struggling around its own retracing area. Bad sign for this pair because it doesn't yet have any clear, obvious bullish momentum. So despite a great cycle, there is no flow of money from the buyers. What the market is saying, as for now, no enough buyers inside, and if they are not supporting the buys here, it's not enough for me to be involved. So as on the euro dollar, I move neutral. When the market doesn't develop what I want, the best thing to do is step back. So I go neutral on this pair. Next one is the pound versus the dollar. Wanted to see the big trend line broken. So on the previous week, we never got it. We never got it this week as well. We have a break on the small trend line. Not quite sure how it would be enough or not. Here is what we are facing here. Some false breakout. So the best thing which I want to see for the pound dollar is making higher highs. If it will make higher highs, we can talk about buy retraces setups. So that's the follow-up for the pound versus the dollar. Let's see if the market would be strong enough to provide us this opportunity. New Zealandian CAD turned to be one of the good trades. The idea was a breakout and a rally for this pair. Quick reminder, what were we facing here? Triple descending movement, two false breakouts, bullish divergence, and the trendline breakout was our plan. We got a beautiful rally here all the way up to the resistance area around the 0.89, slightly lower. Right now we can see that the market is slowing down with this triple cycle and some sort of divergence. So I would not be surprised if we see some corrections before further continuation. The way that the daily was structured, we should be facing two waves correction or any sort of range correction. This or other way around. I don't expect massive movements from this one, and drops with bullish evidences could provide us as a good, nice short-term buy opportunities. Short-term does not mean intraday. Short-term might mean, in that case, several days development, not scalping. So this is for the New Zealandian Canadian and the gold. But before I go to commodities, one more interesting pair that is adding to the list right now, and this is the dollar versus the yen. We don't have obvious cycles in play at that moment. However, we still are facing massive, well, in the bigger picture, massive lower highs, lower lows. And the fact that the daily does not manage to provide us any trend of the direction yet is a sign that there is a good chance we might see the continuation lower. So what did we have here? We had this cycle down, and right now we are facing some sort of ranging correction. Falls back on the bottom, falls back on the top. The way it looks to me, we neither are going for a second push before the continuation, or we are going to hold this range and provide us a further move lower. So I think dollar yen has all the good reasons for some sells. And we can see here on the days to follow, 2021 critical days, right? And the resistance area which is holding here. And of course the tunnel itself, which is holding the bearish. So I would be looking for sell rallies as an opportunity. Right now we have a little bounce as expected according to the statistics. We have it, we are facing it. The next step I'll be looking at would be right here on these days, 20, 21 and also 25 critical days to pay attention to on the dollar yen. So that's from the Forex view. As per commodities, the gold was the main one in our list. The idea was to get this range breakout and to see the gold reaching a new highs. So we got the range breakout and we got the new highs. I expected 1460-ish. It almost reached there, missed several points. The levels now become critical. No reversal signs yet, so we might see the gold and silver as well as it's following. We might see that fighting. I still would not be surprised if we rally for another fake high, but for all those of you who are involved with the buys, it's mainly right now a good place to take the profits and cash out and say thank you to the market. The way it looks to me, it's time for a slowdown. Two massive spikes here on the top. This should become the area that a reversal would build up. It might take time though, but I prefer to cash out, step back and look for clearer setups. So that's for the gold. Not more commodities involved in for the coming week. One thing that starts to be very interesting from my point of view is the German DAX. We are in the structure of two ways on the weekly with a false breakout and with a bearish divergence. 3 weeks in a row creating lower highs, lower lows. The daily chart has well, a good divergence by itself. It's also coming from the weekly. Moving average involved on the daily, and that's what makes me think that we are going for two waves correction here or any sort of a ranging correction. The 4-hour chart, which should support the first leg from the daily like this is what I expect on the daily, as I said before, right? The pink one. So the 4-hour chart is building the blue line. So one more low here, and then we actually could go and start talking about sell the rallies. So German DAX, from my point of view, is building up as a very nice bearish structure, looking for sell opportunities, sell setups inside this area. As long as the invalidation holds, is the right thing from my point of view. So that's pretty much it for this trading week. Of course, there will be more opportunities during the week as well. Oh, sorry, before I forget, Euro versus the CAD, another one that I see going lower. The weekly cycle is still developing the second leg. I think we are going lower there, and also the daily levels give us a good zone to pay attention to right here. So the Euro versus the CAD, personally, I think we still has a room to go. So sales, or if it faces another attempt for a rally back to the trend line, sell the rallies is my plan. I think there is more to go for this pair to the downside. That's all. Just forgot this one from the list. Definitely develop as an interesting opportunity. And as I just started to say, there will be more opportunities during the week, which I will expose, of course, on daily basis in the live trading rooms. So I invite you to join us, and to join the live trading rooms, just follow the link below in the description. And that's all. Thank you very much for your time. I wish you a wonderful trading week ahead. I'm Vladimir Ribakov from Traders Academy Club, and I'll see you around in the next videos. Ciao for now.